All right. Welcome to the next episode of Tulsa Life. We are so glad because we have our expert mortgage guru in the house today, Howard Doak. Thank you for being here. I feel like there should be like an applause, like something that
well, I'm
gives
thrilled
you
to
a
be
round of
here as
applause.
always.
Well, we're so glad to have you. So, a little bit about Howard. I can let you say who you are, but you are our preferred lender at Cityscape. And tell us kind of what you do with Cityscape and the partnership that we have.
So I am the branch manager of Cityscape Home Mortgage. I founded Cityscape 21 years ago. So our company has been around for a long time here in Tulsa, and our mortgage company is the #1 mortgage company on this side of the state in Oklahoma.
Woohoo! That's amazing, and you guys are amazing. So the partnership that we have is really special. We know that we love working with you, your team, and that you take exceptional care of our clients, which is first and foremost for us. So what we do is anybody that comes in that needs any help with the mortgage when they're getting a loan for their home, we send them over to your team, and they take excellent care. And my favorite thing about you guys, maybe not my favorite, but one of my favorite things is that you're local. Like you're here, you're personable. When our clients need to talk, you guys on weekends even. I mean, your team is just incredible. One of the things that I hear a lot of times when people are getting mortgages from other places that aren't local, nobody ever responds quickly. They can't get anybody to respond during nights or weekends, and they feel really lost. So our partnership has been so important for us to be able to provide our clients with a really great option for them to have somebody here local. So we love that.
Well, it's shocking how many people say to us, I reached out to my normal bank and I called them, I emailed them, I called them again, and they didn't respond. And, I know it's sad to say we're kind of grateful that we offer exceptional service because we get a lot of clients who come to us after they've tried reaching out to their bank, maybe even on a Friday afternoon or a Monday morning, and it takes days to get a response.
And days getting a response when you're buying a home could be a make or break situation.
Yeah.
And that's the sad thing is that when people are ready to make an offer and they need a pre-approval letter, they need something showing that they are qualified. If you can't get a hold of your lender, it might cost you the home of your dreams.
Correct. And I mean, it's one of the things kind of bridge to our next discussion is, a lot of people expected this year to prices to drop suddenly in housing. But Erin, have they dropped?
No. Very, very, very small percentage,
Yeah.
if any. And then we're seeing a tick back up now and interest rates. So today, of course, the hot topic is interest rates. And we had a really cool podcast episode. If you missed that one, Erin Robbins and I actually went and kind of like Mythbusters of what does that really mean if interest rates are going up. And I think what she said, it was really funny. We started out the show and she said, we did it. Interest rates hit 8%. We did it. And it was almost like, here's what this means. And this isn't the end of the world. And the sky is definitely not falling.
Definitely
And
not.
we've even seen them now. This is the, last week of November now. I don't know when you're listening to this podcast, but as of right now, in November 2023, we've actually seen some decreases from where they were even last month. So
yeah, rates dropped for the first time in a long time this last week, and it was a great news story. It's funny, the news media covers mostly all the negative news
Right.
out there. I always tell people, pay less attention to the news and focus on your families because they like to show all the bad stuff. But they did report that we did have a nice drop back in interest rate last week. And so we've seen interest rates kind of slowly rise through the year. But what's interesting, and this is something I looked up nationwide, applications for mortgages only dropped 16% this year. And
So all of the buzz that you're hearing,
Yeah.
it's and I feel like a lot of those bigger percentages are in other areas.
that's exactly right.
Like
Tulsa's
Oklahoma,
just not
Tulsa,
that other market.
No, we haven't seen a huge decrease in, transactions. We're actually up year over year
Yep.
for a number of transactions. And the people that we're working with, we're educating them and letting them understand. One of my favorite things that I've heard is that you marry the house, you date the rate.
Correct.
And so I think, tell us a little bit of what that means.
Well, so for example, our company will allow a free refinance of the lender-related charges if we see a rate decrease in the coming couple of years. So what we're saying by you're dating the rate is that
You're not married to it.
You're not married
You're
to
not
it.
locked in.
You're not locked in. As soon as things change in the one direction that it's beneficial to our clients, we're going to reach out and say, hey, Mr. and Mrs. Smith, it's time to refinance your house. So you got the house of your dreams. You locked in that house that was going to rise over the coming years, and you might have been priced out of that home. But now that the rates have dropped, let's lower that payment for you. So that's what we're talking about.
So when you're dating somebody and, you're dating and you like them and they're cool, but then somebody else comes along that you think is cooler, prettier, better, what do? You dump that person and you get the better one. And
Exactly.
so that's what we're saying here is like, you don't have to be locked in. You're marrying the house. You're locked into that house. That home is yours. You get to keep that house. And if another rate comes along that's better, refinance it. And you guys have great incentives for that. And I think that there's also some great incentives too that we're seeing right now in this, climate that people are going, well, I don't know, the affordability is an issue. So when I say affordability, that means because the interest rates have increased over maybe the last few years. What does that mean for somebody who was buying a $300,000 home 2 years ago versus a $300,000 home now? And so, yes, there might be a little bit of an increase in their mortgage payment, but what we're also seeing is some things like buy downs.
Yeah. So, I've said this in our last meeting that people started talking about ARMs and buy downs and permanent buy downs of interest rates. But what was interesting is that up until really recently, people were not using them.
Right.
Even though the rate differential wasn't much different between where we were in January to now, suddenly everybody's talking about 2-1, 3-1, 1-1 buy downs. So what does that mean?
Yeah, tell us what that means, because I think there's a lot of people who probably don't understand that.
Yeah, so when we're talking about a temporary buy down, it was either a 1-1, a 2-1, or a 3-1 buy down. What happens is if you start out at a 5% interest rate on a 3-1 buy down, it will go from 5 to 6, 6 to 7, and then ultimately to 8 in the year 3. So your first year of your payment is going to be based on a 5% interest rate. So that's going to make that house a lot more affordable for your family. Same thing with year 2, 6%. So you're gradually rising in that payment as you're able to afford it.
I have a question for you. If you do a buy down and you're doing that 5, 6, 7, ultimately 8%, what happens if the rate goes down to under that, let's say 7%? Can you refi in that during that buy down time? Okay.
Absolutely. And so we have to be very careful because there's nobody who can predict the market. For the 21 years that I've had Cityscape and almost 25 I've been a mortgage lender, I've had people ask me, what do I think is going to happen? And I'll tell people, well, if I knew for sure, I would be retired in the Bahamas probably by now.
Right, exactly.
But I will tell you, all of our industry experts predict that in the next year, we're going to see interest rates begin to decline and gradually decline. So we see somewhere in the 5.5 range. So if you come in and you do a purchase today on a 2-1 buy down, you're going to be able to lock in a rate really close to that down the road by refinancing.
And the worst case scenario, you're at 8%.
You're at 8%.
So there's no real drawback to it if you feel like there's a chance that they're going to go down.
Yeah.
And ultimately, the worst that you can do is the current interest rate, which is hovering around 7-8%.
Well, I'll tell you, they're not that today. So I don't know when you watch this, but right now, I look today, with a very small permanent buy down, we're in the 6s again.
Oh my goodness.
So, things are definitely improved from where, the negative news a couple of weeks ago.
So now here's the next thing. So I think this is also one of the things that we referenced in the podcast previously. And that episode we talked about right now, because I think that national media is definitely painting a picture that's probably a little bit negative and scary for some people. And they're thinking, oh my gosh, this is terrible. Like interest rates are so high and nobody's buying houses. Number one, people are buying houses. Number two, we're not flooded like we were last year with there being multiple offers. We're actually seeing a little bit of loosening up where sellers are willing to do buy downs.
Yes,
we're
sellers seeing more
are
sellers
willing
participate
to do closing costs. Yeah. And so I think that if interest rates go back down again, we're going to have all this bottleneck of all these buyers that have heard the national media saying that it's scary enter into the market again.
Yes. So it's I'm teaching a class in a week or so about the negatives of waiting to buy real estate. And it's just historically been an American family's best investment is real estate. And I found this quote, which I loved, and I want to read it. A home is the largest financial investment most American families will ever make, and it allows families to build financial security as the equity in its home increases. Moreover, a home is a tangible asset that provides a family with borrowing power to finance important needs such as the education of children. So I Googled looking for good quotes, and that was a quote from the first Bush presidency. And I thought, how appropriate. And you could go back another 10 years, and you're going to hear this over and over again, that buying a home is what creates wealth for Americans and security for Americans. So waiting to buy your house because you think a future rate is going to come down is not a smart move.
It's prolonging your wealth.
Correct.
Prolonging the opportunity.
Yes.
And I agree. There went your glasses.
I know,
I hope you don't have to read anything else. Okay,
no more reading for me.
So I think that goes to another great point, too, that people don't even understand sometimes what they can do and like what their opportunity might look like. Because I think that there is a lot of people that we talk to that are like, I'd love to buy a house. I've been renting for years, but I don't think it's in the cards for me. And I don't have a lot of money to put down. I don't have, a ton of money in my bank accounts. And that's another big myth that I feel like through education and consulting that we can really advise our clients. Here's the plan. Either you can't, maybe you even can do it right now and didn't know it.
Correct.
Or let's put a plan in place. So tell us a little bit about what you guys do.
Another interesting thing I read before this podcast was I was curious, the interest rates rose, which would make homes less affordable for Americans. That's what you would think. Well, when you looked at the applications for mortgages this year, it was a very small amount of home buyers that suddenly couldn't qualify. It's very, very small. And, one of the things that your team does better than most everyone in town is that you look at the family and you look at what can they afford in a house. It's not about going, okay, I'm going to go buy a $500,000 house. You go, all right, what's the payment? What's your budget? What do you need?
Yes. What are you currently paying in rent?
Correct.
Because I think this is the huge, huge disconnect for people. If you are already paying $1,500 to $2,500 in rent to a landlord, there's a really good chance that you can afford your own house. And it may not be today, and we may need to say, this is how we work this is how we do this is how we give you a plan. But I think there's a huge misconception on how much money you need down. We work with people all the time that come and they say, I don't have any money to put down. And we find through
there's
gifts.
Still great options.
Tell us a few of those options.
Yeah, so here in Oklahoma, we have a program called OFA, which is a down payment assistance program that can be used for a conventional loan and an FHA loan, a 184 loan. Basically, you can apply a grant for a home purchase for that first-time home buyer so that you do not have to have your own down payment. Of course, you have to qualify. There are income, provisions to that, but a lot of families will qualify for that. So let's say that you come to a realtor and say, I don't know if I can qualify for a home. And they refer you to their lender they work with.
The Cityscape.
Yes. One of the first questions we're going to ask, have you owned a home in the last 3 years? If you have not, you may qualify for a first-time home buyer grant. And that may pay some or all of your down payment if you qualify. So getting into a house with little or no money out of pocket is still an option today.
Or if you have a grandma who wants to help. Right. If you have a parent who wants to help, we are seeing more and more people that instead of having huge weddings, their families are actually gifting them down payment for a home, which I love that idea because your wedding, it's going to be beautiful no matter what because you're getting married. It's a beautiful day. And that day it comes and goes and you've spent thousands and thousands of dollars on this one day where you could take that same amount of money, make it a down payment on a home, and it is perfectly fine for a family member to give you a gift. And that is something too that you can use for your down payment. The other thing is that closing cost. So there's a couple different things that you need when you're buying a home. Down payment is one of them. Now, Howard rattled off a few different acronyms there just a minute ago.
I did, sorry.
And he said,
lots of
different FHA,
talk.
conventional, and Oh my gosh, what is the 480? What is the other one?
So 184 is a
184.
Native American loan, and it's a fantastic. So if you are a card-carrying member of a tribe here in Oklahoma, there is an amazing loan product
Right.
called a 184 mortgage that has a very small down payment. It has a smaller monthly mortgage insurance than others, and it's wonderful for members of tribes.
Yeah.
We have a lot of Native Americans in Oklahoma. I also mentioned FHA, which has been traditionally the loan product where first-time home buyers use because it is more forgiving on credit and debt ratio and history. So it allows for more families to buy. And that's the other thing is that earlier we talked about the fact that the market has changed some. Well, what it's done is it's allowing people that were pushed out of the market the previous 2 years to re-enter the market. We're seeing more and more people get accepted offers with FHA loans, closing costs being paid by the seller, VA loans, FHA loans, 184 loans. All of those loans in the previous 2 years were a smaller percentage than they had been historically. And so we've seen those rise back up because those families know the importance of home ownership, especially here in Oklahoma. And we're seeing those people be able to buy houses again.
Yep. And this is what I would tell you too. You don't have to know any of that.
Nope.
You don't even have to remember any of those types of loans or what it takes or how much it costs or anything, because all you need to do is connect with us or with a professional who can walk you through that. Because at the end of the day, what my favorite thing is to hear our clients say, I had no idea, number one, that I could even buy a home. And then I had no idea that it could be this easy to purchase a home. But when you have the right people around you, advising you and helping you and consulting you, you don't have to know everything. I don't know everything that Howard knows. I don't want to know everything that Howard knows. I don't have enough space in my brain to keep all of that. But I know that I know an expert locally that I can refer to and ask. And I mean, my goodness, we lean on your team all the time and vice versa to go, hey, I'm not exactly sure what this means in your world, but here's the question that I have, and then we can get it answered.
Well, when I work with a client or one of my team does, we're going to talk in very elementary terms. We're going to talk very simply and help you figure out the process.
Talk down to me a little bit so I know. Yeah, slow and calmly. Yeah.
Exactly. The other thing that a lot of people are very scared about is their credit. You know, I hear so many times, I don't think I'm going to qualify based on my credit. Well, I will tell you 100%, it is never, ever hurts to have a lender pull your credit, look at it, and to give you a game plan so that you can have a plan for the future to buy down the road.
Yes. I love that. Okay, so how do people get in contact with you?
You can reach out to us. We're local. You can Google us on the web, Cityscape Home Mortgage, and our number is 918-622-0900, and we're easy to get a hold of.
And of course, you can also contact us at Erin Catering and Company, and we will gladly connect you to Howard and his team. They are go-to with everything mortgage related. They can help out and put a plan in action for you. And I'd say at the end of the day, just know that home ownership might be closer, and it is the beginning of building wealth, you know, for you and your family. A lot of times, most of the people that are the wealthiest people in the U.S. are wealthy because of real estate.
They own real estate. That's the big indicator.
But the biggest thing, I think, is it's not just the wealth that you might build financially, but the memories that you can make, that home ownership. There's nothing like that in your heart, you know, that you can say, this is mine, this is my home. And that feeling of home is a really special thing. So we'd love to help you. But hopefully this gave you a little bit more information today about interest rates, affordability, and how to get connected with somebody who can really help you put a plan in action to be able to buy a home. So until next time, enjoy this one, and we'll catch you again, and happy Thanksgiving.
Happy Thanksgiving.